Here's 11 o'clock. We're going to finish at 12. I'll start the preamble now whilst others join us, including Sir Philip Woody. So good morning, everyone, and very warm welcome to people giving up their time, their day, and even from watching Dominic Cummings' testimony, compelling though it might be, to join Localis's policy webinar today, Playing It Long, Local Public Services, and the next spending review. My name's Jonathan Warren. I'm the Chief Executive at Localis, and I'll be serving and acting as moderator for today's panel debate. And we do indeed have an excellent panel to look at the future of how we resource the local state with what we know is going on economically and politically. We have in alphabetical order the inimitable Mr. Michael Burton, not Professor quite yet, Michael, but getting there, editorial director of the MJ, who's now into his third book looking at our recent fiscal past from bust to Brexit. You can plug when your time comes along, Michael. Also joined by Abdul Kara, executive leader at influential spending watchdog, the National Audit Office. From Lancashire County Council, great pleasure to have Chief Executive Angie Ridgewell here to really help us explain how the rubber might hit the road in terms of the operational aspects to our local public finances. And we'll be joined by Philip Woody from Grant Thornton to give to complete our overview as to the medium to long-term future of local public finances. And that's what we have today. Today's debate is an opportunity to do a bit of strategic thinking, to provide a clearing in which to give some thought and future to a very important subject. And the difficulty that's been bedeviling us is we've had not one but two stopgap years of bodge in terms of public finances, two 1-year spending rounds, first occasioned by the Brexit period just before the 29 election, and last year by the pandemic. Clearly, there's some hope there will be a spending review this year. Wait until it's announced, not before. But beyond that anyway, local government and its allies in the sector have been calling for a long time now for a sense of funding stability. And in the absence of any direction about whether we're getting a multi-year spending round, and with so many contingencies, emergency funding from COVID still unaccounted for, it's probably fair to say not only do we not have a map, but even some of the expected terrain isn't there. What can we say? What can we guarantee? Well, we still have the most centralised system of taxation in the OECD, just about. Council tax will remain, as far as we can see, a 5% increase year on year to plug some of the social care funding, which is without touching the sides. Business rates, they await like Godot there, something that, whether it's fundamental reform or more, but in the meantime, they become ever more redundant as a revenue raising exercise, even as the long-awaited recovery kicks in. Yesterday, we got some indications about public finances. The Office for National Statistics set out what last year's borrowing figures were, a stonking 300 billion, the highest level since World War II. And in terms of public spending overall, it meant that public spending was about 200 billion more than it would have been hit otherwise, reaching about 942. So we've got essentially nearly £1 trillion worth of public spending. But in terms of the local state, the Chancellor, his room for manoeuvre on austerity measures for local government will depend on the size of the long-term hit to growth and GDP from the recent recession. So it's all based on an unknown to back translate Donald Rumsfeld. A known we do have is that if we want to keep the coherence of the local state, our councils everywhere need a long-term financial strategy and understanding as the basis from which to undertake social renewal and economic recovery at the level of place. Now, it's been frequently and repeatedly said over recent decades, but the pandemic has merely shifted the precariousness of local authority budget setting up a further dial. Great to have Abdul here. In March, the National Audit Office calculated 3/4 of councils face a COVID funding gap, some significantly. More than a quarter are facing overspends this year, and the overwhelming majority are looking to reduce their spending budgets in 2021, 2022. So that's kind of the immediate context for looking at how we're going to debate what a long-term settlement might or could look like for our public finances. Now that we've got, all things considered, a bit of political, social and economic settlement, now that some of the kind of sediment from the recent stirring has reached the bottom of the glass. So essentially, the purpose of today's debate is to think strategically, raise some questions. What could a settlement mean further down the line for reforming local public services, and perhaps opportunities to deliver better and more responsively, perhaps motivated by what's had to be done in public services last year in response to COVID. We have a government very committed to building up regional economies, but what would a spending review settlement perhaps need to include, so we can learn lessons from the pandemic, dread phrase, build back better, and to create a resilient local state that delivers at community level? For example, would there be any wiggle room, for, say, that upstream investment in preventative and public health, which the pandemic has laid clear? Any ability for strong social infrastructure without the tournament financing of bidding for cash pots? Is there any way we can maybe mitigate for long-term areas of underinvestment at the local level? So much of this depends on what central government can do, but what can local government do with its own resources, either its place assets or, more importantly, its convening power to locally fund highly valued services and ensure that local priorities can be met. So that's kind of what we aim to get from today's debate, to put it out in the open what settlement might look like. We have a hashtag for today's event for those following on Twitter, public services belong, and it's a very simple, straightforward format. We've got a great panel: Michael, Abdul, Angie and Philip. I'm going to invite each of them in turn, in alphabetical order, to set their case for what a long-term or stable settlement might look like or could look like, given what we know. Once that's all done, we're going to put it to you, our esteemed audience, to lob sensible and good questions into the Q&A box. I will raise those with the audience, and we'll try and answer as many questions in the time we have. And for those we can't answer, we shall try and find a way afterwards. So if we're agreed that's the way to go, I'm going to invite Michael Burton to come up on stage virtually and give us your views. Thank you.
Right. Well, thank you very much, Jonathan, and for that introduction as well. And also thank you for the little plug-out you gave me. My last book actually was on the politics of austerity, which is about how governments manage public spending during recession. So quite apt at the moment. When I was doing a little bit of background research, I noticed that Policy Exchange did a report, which was sponsored by Localis, back in the November 2003, and the quote there was, "It's high time that the local government finance system was reformed." That was 17 years ago. I don't think we've particularly moved on much since then, but nevertheless, it's always good subject for debate. I just wanted to go over the next few minutes, just kind of a couple of a few points which I see. I dare say some of them will be picked up as well by the other panel. To me, there's like two big issues. One is the fiscal consolidation issue, which you've touched on with the latest public finances. We've got a deficit of something like 14%, nearly 100% total borrowing, 100% GDP. So that's obviously the highest it's been since the 60s. So fiscal consolidation is one challenge. The second one, of course, is much longer local government finance reform. Both of those obviously are hugely challenging in their own right. As far as the first one goes, inevitably, and I think it applies to all of local government finance, you cannot separate it from politics. governments will, of any hue will always remember that what brought Margaret Thatcher down was the poll tax. Local government funding, despite its fact that it's a rather arcane subject, is also potentially a massive political elephant trap. So the first one, fiscal consolidation, a few thoughts there. When they introduced the first fiscal consolidation, i.e. austerity in 2010, public opinion generally was more in favour of it. They felt that the public finances need to be sorted. This time round, austerity is not acceptable, and it's not actually even acceptable politically. This government certainly wouldn't be talking about austerity in the way that the coalition did in 2010. So that's a challenge for them. How are you actually going to, manage those public finances without, while somehow making spending cuts which can't be construed as being to do with austerity? The other issue, of course, is how does that fit in with the levelling up agenda? The levelling up agenda involves inevitably more public spending. So how are you going to balance that if you're trying to cut it? As we know, the big cuts in last time round in 2010-11 were in local government, defence and so on. But local government in particular, and particularly in things like specific grants, which hit the very areas which are now the areas being targeted for levelling up. Second issue, looking at more long-term funding challenges. Jonathan, you touched on revaluation. Again, massively politically difficult. Yes, it's based on 1991 prices, but how do you introduce that? You're going to end up, and it's obviously massively overdue, but potentially it has the potential to be a poll tax roll all over again. The last time they got rid of poll tax, if you remember, they funded it with a rise in VAT. If you started to bring revaluation up to date, how do you manage the losers? You're going to need a huge amount of transitional relief over a period of time. Probably the simplest answer to that one would be to add on bands and get around it like that. Business rate, we'll come back to, I'm sure, later. Again, that's been rather overtaken by events in principle. Hopefully a good idea. We were going back to the 1980s before it was nationalised. Social care, again, we've been much publicity on that. That certainly in no way can be funded just on business rate or council tax. So the question there is how are we going to fund social care? Preventative spending is also an interesting one, i.e. things like leisure centres, public health and so on. At the moment, speaking of somebody who's a regular user was of leisure centres and so on, they're under a huge financial pressure. And yes, at the same time, leisure centres are very much part of the kind of preventative health agenda. So how does that fit in? And how is that going to be funded? New revenue streams, well, the NAO has obviously made its comments on things like property speculation. It's always been a risk. I can remember, I've been around quite a few years. I remember the days, and Abdul might remember this, when there's such a thing as incidental trading, when DLOs were allowed to do a little bit of, if you like, a little bit of trading on the side, and some of them got quite over exuberant about it. And in one case, I think they were selling a load of UV-PC windows to East Germany, as was. And I remember the Audit Commission being very strict on that one about incidental trading, and obviously that's now different. But nonetheless, when you're starting to look at new revenue streams, and as far as I can see, most council chief executives I spoke to in the last few months have all said new revenue streams really important for us because they realise the landscape. The other one is charging, and that's an interesting one. I've been thinking, if you think over the last few months, I think all of us have ended up doing a lot more online shopping, and that's involved vast amounts of packaging and cardboard, which has to be taken away by the whole refuse staff. Now, there's no extra charge for that. I didn't pay any more for it. So you do actually, if you start looking at the proper charging of local services through council, how much scope there is for that. And I know, of course, at the moment, a lot of charging has actually reduced inevitably, things like parking and so on. So anyway, those are, to me, just a sort of few thoughts to throw out. But to recap, it does seem to me we've got these two big challenges, kind of issue about managing, the public finances, getting that deficit back down again, but longer term, putting local government on a much more sustainable footing, because it can't carry on lurching from one annual spending review to the next one. Well, thank you, Jonathan.
Many thanks indeed, Michael. Next up, Abdul Kara, Executive Leader, Local Services, National Audit Office. The floor is yours. Take it away, please.
Morning, everybody, and thanks for the introduction, Jonathan. And Michael, you're always a tough act to follow. I'll do my best. The NAO is kind of long on record that the government needs a plan to secure the financial sustainability of the sector. In our seminal piece in 2018 on financial sustainability, we said that the lack of a long-term funding plan for local authorities was replaced by a funding landscape characterised by one-off and short-term funding initiatives. And here we are 3 years later, the position remains largely unchanged. Local authorities budgeted for the current financial year based on a one-year spending review. Major reform initiatives such as the fair funding review, the proposed move to 75% retention of local business rates, and any reform plan for social care none of these have been delivered. And for us as the NAO, financial certainty and stability are needed not only around supporting social and economic recovery, but really they're core to achieving value for money. Financial uncertainty, both in the short term and long term, creates risks of value for money because it encourages short-term decision making and undermines strategic planning. It also, to pick up a point you made in the introduction, Jonathan, short-term funding also weakens authorities' ability to invest in preventative services, which we all know deliver value for money over the long term. So before the pandemic, the system was in need of reform, and COVID-19 has exacerbated those spending pressures and issues. Even after the economy is hopefully recovering from the pandemic, the sector's finances will be scarred for many years to come. For example, as a result of any ongoing costs and demand pressures, the need to replenish diminished reserves, which have largely been used up, the need to deliver savings programs that had been planned that haven't been able to be delivered during the course of the pandemic. In the event of an economic downturn, there'll be a growth in service demand for things like welfare support or children's services. There might be continued losses of fee and charge income, as well as council tax and business rate tax losses, and also reduced tax bases. Tax bases haven't grown as quickly as medium-term financial plans would have set them out. You know, these issues are not going to disappear overnight. When we produced our report a couple of months ago that you referred to, Jonathan, on financial sustainability of the sector, fewer than half of single-tier council FDs felt that their finances would return to pre-pandemic levels before 24-25, and that's 3 years away. So the sector is in a double bind. It was reliant on a flawed system, and that system has now taken a further hit or set of hits due to the pandemic. So what are the options for reform? When we had the recent PAC session, the Public Accounts Committee session on local government finance, witnesses expressed real concerns over whether the reform options on the table before the pandemic are necessarily the right ones to go forward with now. The shift to online and the decline of high streets has already taken the shine off business rates localization, and the pandemic has demonstrated the extent to which local finances reliant on business rates are exposed to economic change and uncertainty. As a consequence, and I slightly paraphrase here, PAC witnesses were saying, in effect, let's just not go rushing ahead and assume that further business rates localization is the answer. Let's pause and think through these reforms from scratch rather than just ploughing on. You'll note that that's the opposite position than the likes of the LGA were taking pre-pandemic. One area we haven't done a huge amount of work on is council tax, but nonetheless, there's plenty of evidence out there around its shortcomings as a tax and as a source of local government funding. We do know that council tax is becoming an increasingly important source of funding. Between 2015-16 and 2020-21, government grants and business rates income to local government fell by around 30%, whilst over the same period, council tax income grew by 20%, not least as a result of the social care precept. We also know that different areas have significantly different abilities to generate council tax income, with the most deprived areas tending to have the lowest levels of council tax income and the least ability to grow that. What about income from commercial investment? Again, touched on by Michael. Recent changes to the Public Works Loan Board lending terms by Treasury to cut down on debt-funded commercial investments will probably have the desired effect over the medium term. Whilst this might be unfortunate from the perspective of the sector, it was inevitable that government would intervene at some point, given the levels of risk being built up in parts of the sector. I do want to emphasise this doesn't halt investing for commercial investment. It's an attack on borrowing for commercial investments. There are the ability to generate income from commercial investment still exists. Where else can local government look? What is the future model that addresses these problems with the existing framework? Thankfully, answering these types of questions is not the role of the NAO, and our ability to talk up or discuss the relative merits of different ways to diversify local tax bases is limited, but we can deal in one principle. And the principle, which sounds simple, is that funding should follow the function of local government. If you look at recent years, the current trajectory for local government is towards a narrow core offer, increasingly centred on social care. As long as social care remains a function of local government, it's becoming an increasing proportion of local government spend. This is the default outcome of sustained increases in demand for social care from society and of tightening resources within the sector. But there's been, I certainly know of no clear policy direction from central government or expression from local communities setting out the arguments for this and reaching a consensus that this is actually the desired endpoint for local government. So are we happy with this drift, or does there need to be a reset? We think that this is the conversation that needs to take place. Once we have some clarity on agreement for the purpose and function of the local government, and in particular whether social care it remains a local government function and the mechanism for its funding, then we will be better placed to identify how much is needed to fund it and how this funding can be secured on a sustainable basis. That's my intro. Back to you, Jonathan.
Abdul, many thanks indeed for a very coherent, strong narrative from the NAO. And now over to Angie Ridgewell, Chief Executive at Lancashire County Council. Take it away.
Thank you, Jonathan, and good morning, everyone, and thank you for moving away from Dominic Cummins. This will be equally as exciting, I'm sure. So when I started thinking about the question that was posed, as I often do, I tried to go back to what are the basic principles, and really building a little bit on what Abdul said. The first thing I was thinking about, well, what is the purpose of local government? And for me, that's about providing services which are there for the greater good, so our highways infrastructure, our educational infrastructure, so on and so forth, and also about supporting those most vulnerable who need state help, so financial support, social care support. And what that tells us when we think about that is that very often there's a weak link between the wealth of an area, so its ability to fund itself, and the support it needs. So there will always be in the local government system a need for redistribution. And I think very often we forget that the redistribution of wealth is a fundamental part of public services. And that certainly, I think, got in the way of some of the debates that we've had in the past, particularly as local authorities have competed against each other for financial sources. The other thing that really struck me is our determinant of wealth is largely based on property in this country. And actually the link between property and wealth is becoming increasingly remote. And we've seen that in the business rate sector. And similarly, we start to see that in council tax as a regressive system. So I think for me, reliant on a property-based income generation system is something that needs to be revisited, and I do take on board Michael's point that has happened in the past. It hasn't been totally successful, but I do think that needs to be revisited, and I think the pandemic has thrown that into stark fact. The other two things that are really important to remember is that decision making as close to the people as possible is really important. And there's lots of evidence that where you give people agency and control, the outcomes for them are highly improved. And finally, these are strategic decisions. So while we have placemaking responsibilities, the investment in all of that is generational in terms of the outcomes. So having an annual funding review doesn't help, and it's our responsibility in local government to think about the whole system. So we can't think about creating jobs without equally thinking about the skills base of our young people coming through the system, and indeed the population health that we have. For example, in Lancashire, we hemorrhage about £5 billion a year from our GVA just as a result of poor productivity. So we do need to think about that whole broad system. Having reflected on all of that, though, I think what we can say is that at the moment there is no evidence of strategic thinking within our current government. And indeed, as they move ever closer to the spending review, the conversations that we are having with our political colleagues in Whitehall, or indeed our civil service colleagues in Whitehall, is very much about the impact of efficiency and further savings on local government, and not looking at a strategic approach to that. Also, what we see is a government that relishes in deal making, so lots of pots of money, which we all compete for. And of course, that is always attractive in a government which has a small majority, where they have to have transactions in order to get the support that they need for their broader policy suite. And of course, as we get closer to elections, again, that degree of transactional decision making becomes ever more attractive. And every day we move forward, we get closer to the new elections in 2024. So I think we need to be pragmatic and accept that at this stage, it's highly unlikely that we're going to have a radical change in the next few years. So it's our job to think about how we might chart that course to the changes that are necessary, and how we manage that in the meantime. And if we accept that there's going to be no radical change in the short term, I think we do all accept that there needs to be a radical change. I certainly would be looking to all of the agencies to call to government, as Abdul suggested, to have a fundamental review of this, and to call together a commission of experts to look at the whole policy of what is local government about and how is it appropriately funded, and whether having a property-based income generation system is the right solution going forward. And within that, we also need to think about the overarching governance structures so that we can look at that principle about how do we give agency to those people that local government are there to represent, and again, encourage outcomes that are positive for them. So for me, what might a good system look like? Well, for me, I wonder whether there's a chance to look at a different way of tax raising that moves away from the property base, but is overseen by an independent body, because there is always going to be that challenge about the ability to raise income will be different from those areas that need the resources. So I do think there's the opportunity to look at an independent body to oversight that, and to bring in some objective evidence-based drivers that remove some of the political barriers that we experience at this stage. And why I think that's going to be that would be important is local government in particular, while it's got a positive dividend with government at the moment through the pandemic response, we do struggle to have the same voice as, for example, the NHS. So an independent body that can look at this might give us more gravitas and more influence in government. And equally, one would hope that through that we could look at a longer term settlement, perhaps of 5 or even 10 years, bearing in mind the strategic nature of the work that we do, and particularly the longevity of place shaping. Of course, it's really important, though, that aligned to anything like that, that the role of local government in decision making and delivery of service, that we make sure that we're designing into that structures whereby we can create agency for our local residents, and they feel the ability to control and influence how we deliver our services and meet our statutory obligations in the longer term. And equally, that local government has a very clear sight of those areas where it can influence and drive changes. So, for example, as Michael referenced, the use of fees and charges where appropriate, and also the convening power and the place shaping powers of the assets that the public sector in totality own in areas are incredibly important. If we're not willing, or it proves impossible to look to a radical change in the system, then again, I think we can also have changes to the council tax system, which would be beneficial. So, for example, for years now, government have dictated to local authorities the degree to which they could increase council tax. And we have had the choice recently of adding additionality to that to finance adult social care. And it always struck me that if government are going to control the degree to which we can increase our council taxes, that should be for statutory services, which does include social care. And then areas where we have discretion, so where we can choose to add on more, that should be for the discretionary services, and that could be very much a local determinant. So if we look at the previous model where we could have 5% council tax increase, which was 3% fixed, rounded of course, and 2% optional for a statutory service, I would say you would do, for example, 3% fixed for all your statutory services, and then you can have whatever is decided locally for those discretionary services. So I do think there are different ways that we can look at how we cut the cake. But having said that, I do think there's some things that local government itself needs to step up for and take responsibility for, and we can do that now in advance of any revisit of the financing system. So we do need to develop long-term plans, which are credible strategies, which work with our partners to deliver change, knowing what are the issues in a local area, because local authorities know their areas better than anyone. So we need to use our convening powers within the local area to bring all public sector bodies and indeed private sector bodies to set that agenda. We need to change the conversation from one of we can't do this, we need more, to one of we can do this, and these are the strengths we've got, and this is what we're going to build on. So really stepping up and taking that place leadership and encouraging our population to build on what they've got rather than to reflect on what they haven't got. We do need to make sure that we also prepare our politicians. If we really want devolution, which I think we absolutely need, and more decision taking at a local area, we need to make sure that our politicians are available and able to make those decisions. And certainly during the COVID pandemic, we did see some issues where politicians wanted local control, but when it was the tough decisions, they really wanted government to take them before them. If you want control, you've got to be accountable and you've got to take responsibility as well. And of course, we need to design into our governance arrangements how we engage much, much better with our local communities and how we empower them and our staff to make decisions which are much more in their interest. So I do think there's a lot to do here. I would like to see a much more radical approach going forward. And I would be prepared to trade off short-term settlements today if I knew that there was going to be a fundamental resetting of the dial in the longer term. Thank you very much, Jonathan.
Many thanks indeed, Angie, for a very strong perspective from the Chief Executive's position. Final speaker now, Philip Woolley, Partner Grant Thornton. Take it away and let me know when you want to share screen for slides.
Yeah, thanks, Jonathan. Excuse me, and good morning, everyone. So a lot of points already been made, so I'll try and keep my comments relatively brief. I was going to really talk through in three parts. So first, just to run through some of the current financial forecasts the local government that Grant Thornton are working with and working with clients on. Secondly, a brief run through our perspective on where progress on reform of the funding framework currently sits, and then perhaps just sum up with where that leaves authorities with regard to financial planning and financial management going forward. So if you could share the first of the slides, Jonathan, that would be helpful. Okay, so this is taken from the financial foresight model that Grant Thornton has developed alongside SIPFA, and shows what I think we all know, that local government continues to face a very tough financial outlook. So on the slide we have what we are calling and working with at the moment around our reasonable best case scenario, where we see a gap between income and expenditure of 0.3 billion for 21-22 and 1.4 billion for 22-23. However, under what we've termed a reasonable worst case scenario, that's 1.3 billion 21-22 and 2.5 billion 22-23, with the gap between income and expenditure continuing to diverge beyond 22-23. If we turn to the next slide, please, Jonathan. We've projected those financial forecasts across the different tiers of local authorities. What we can see from that slide is that many authorities remain at significant risk of what you might call financial failure, or at least depleting reserves below what might reasonably be described as a sustainable position, which we pitch at sort of 5% of net revenue expenditure. So in summary, the outlook remains pretty bleak. That said, I think it's probably worth mentioning that in financial terms in 21-22, what we're picking up from our audit base and our clients, and when I speak to my audit colleagues in the business, is that 2021 may not have been quite as bad as was feared this time last year. And we have a good number of clients reported underspends versus budget, taking into account the various emergency funding received from government as a result of the Delta returns process, etc. But overall, a pretty bleak outlook. So what's our perspective on where progress on reform of the funding framework currently sits? In summary, I think as previous speakers have said, we don't see anything too radical emerging in the near term. Fair funding review is on hold. Government doesn't appear to be any further forward on business rate retention, and progress around future funding of social care is also stalled. So we think radical change at this stage is very unlikely. And I think we have some sympathy with the government's position on trying to track a way through this, given the uncertainty around the current economic landscape post-COVID, or as hopefully we're now starting to emerge out of the COVID crisis. So some of the big ideas that underpinned, the future funding prospectus, as has been said earlier, elements around fiscal devolution, business rate retention, etc., look really difficult in the current economic uncertainty and with the fundamental changes that we've seen happen to the economy, which have only been accelerated under COVID. So high street and property-based businesses under more pressure than ever, and the risk of really significant increases in unemployment post-furlough, added into that sort of emerging inflationary pressures that could place council budgets under significant and more intense pressure going forward. So to present radical change at this exact moment, when me and Jonathan were discussing this earlier, Jonathan described it as a hospital pass, and I think that would be the perfect description of it if those things were to be put on the sector at this particular time. So what can we reasonably ask for at Grant Thornton? We're saying, in our consultations with government, earliest possible announcement to allow planning. The announcement last year around budgets and the sort of 1 year roll forward was pretty late. That was unhelpful. So more certainty, I think, is the second ask. Will it be 1 year? Will it be 3-year settlement? More certainty would be favoured, but as I say, we don't expect the underlying funding formula to change, and that would largely be the same. As Angie has said as well, we also see probably an outlook where there will be increased bidding against pots of funding around the levelling up agenda. Some councils are very good at that stuff, others less so. So that will be a challenge for authorities going forward in the near term, I think, as the government pursues that levelling up agenda. And we expect most of that funding, of course, to be capital in nature rather than revenue, so it won't help the underlying financial sustainability of authorities. So where does that leave authorities with regard to financial planning and financial management? There's some big risks out there when we talk to our clients. So long COVID emerging as another significant spend driver in social care, inflationary pressures, unemployment, business failure impacting on council tax and business rate base. We started to see, or our clients are talking to us about culture of emergency spending that is challenging for directors of finance to unwind within their own organisations, and significant pressure on trading companies and outsourced arrangements rely on consumer income, so Mike referred to leisure, and we've been working extensively in the leisure sector over the last 12 months, and that's a part of the local government framework that looks really challenged from a funding perspective over the immediate term. So what's the response? Robust financial forecasting and scenario analysis. So beyond a sort of central forecast with sensitivity analysis, what we're encouraging our clients to do is undertake really sort of comprehensive scenario analysis, looking at a fuller range of potential operational and economic contexts and framing associated financial plans that can respond to those quite wide range of potential outcomes over the next 12 months to 2 years. So it really requires robust plans around place, services and organisation. So in summary, things remain really tough. We don't see radical funding change in the near term, and robust financial management and planning more critical than ever. And that was it from me, Jonathan. Thank you.
Many thanks indeed, and indeed to all our panelists for trotting through their own thoughts about what's likely, what long term might look like. Now, clearly, I think the consensus is there can't be or won't be anything radical anytime soon. So essentially, the sector has to patch itself along with whatever comes its way, while maybe preparing for not exactly sunlit uplands, but hopefully, as Abdul and Angie were indicating, some kind of reset to get things on a proper, decent level. Now it's over. We've got sort of 20 minutes spare for any questions and answers coming in. For those following on Twitter, here's your hashtag public services. So a quick question to the panel. We've got one Q&A box. Obviously, Michael, your picture, you sat next to Eric Pickles. I'm going to unholster the pearl-handled revolver. Now, Peter Hayden asks, is the UK moving to unitary local government? Thoughts on ideal size of authorities? Now, we're not going to play MHCLG, invent a population size, and stick to it. But clearly, Neil O'Brien's been given the job as levelling up advisor. We don't have the levelling up white paper has replaced the economic recovery and the English devolution white paper. It seems like a lot of the conversation is going back to that kind of, none of this is new. So Harold Wilson's Redcliffe Maud, then rejected by Heath. Form, function, and finance. So the 3 Fs have to be taken into consideration. Is there any, changing the size or the function of local government or structure be of any help at this instance, or would it just be create more problems? Anyone like to go on that?
Well, I'll very quickly just say in response, Jonathan, no, in my view, not at the moment. But I mean, it's horses for courses. I mean, it's done, you know, if you look at the unitaries we've got at the moment, we've got a combination of, if you like, voluntary ones like Bucks, Dorset, etc. You know, where there's been kind of long time coming, and then obviously places like Northamptonshire, which was kind of enforced, if you like, for their own various problems there. So I think the landscape, they will continue. We will see, I think, more unitaries slowly coming on stream, but there certainly won't be a lot of them. And every time you obviously reorganise an organisation, it does cause disruption, and that's not necessarily what you want right now.
Shall I come in? I mean, history tells us that there is a move to unitarisation. It's just very slow. If I could project a graph, I would show you the growth of unitaries, and including unitarised counties since the 74 reorganisation. So I mean, I think that's inevitable. Do I think it's the answer to the problems that are facing us today? Not necessarily. Partly because of the disruption that Michael has spoken about. I mean, I think that's a different question than the form and function of local government. The biggest issue, the biggest kind of elephant in the room is social care. And it seems to me there are three possible outcomes. One is social care stays with local government and continues to be funded in a similar way to that which it is today. Secondly, social care stays with local government, but there's a different way of funding it, which might be, you know, a German model, Japanese model, something like that. And the third is that social care leaves local government entirely, perhaps to go to the NHS. I am not, by the way, suggesting any of those. I'm just saying the answer to that question, which of those three paths government takes, because social care is such a huge proportion of local adult social care, is a huge and growing proportion of local government spend, it will dictate what happens to the rest of local government in terms of form and in terms of finance. So that for me is the kind of inflection point for decision making. And you know, I think Philip's probably right that we're not going to see that addressed in the spending review later this year, but we are promised a plan, aren't we, sometime this calendar year. So we watch out for that with interest.
Many thanks indeed. Angie, please come in.
Yes, just to add to that. So unitarisation has been a big topic of conversation in Lancashire for many years. My personal experience would suggest that if we were designing local government now, we wouldn't design in the two-tier system. But at this point in time, with all of the issues that we face, do I think local government reorganisation is going to be a good use of our resources? Probably not. For me, as Abdul said, actually 65% of my spend each year is on adult social care. So my relationship is more fundamental with the health service, actually, than district councils in many ways as a result of that. And we need to address this issue. So I do think unitaries are something we should look at, but I don't think now is the right time. And I think we can do more by building on the partnerships we've established through the pandemic. And fundamentally, if we can get data sharing much improved, I think that will have a significant impact on how we deliver services. In respect to the future of adult social care, that absolutely needs to be looked at. What I would flag, though, is if it were to go with the health service, we just have to guard very carefully against the risk that all of the money is then sucked into the acutes, and actually there's even less for community social care, which actually is all about designing in independence for individuals and avoiding hospital admissions. And it would go into a system which is fundamentally incentivised to have hospital admissions, and the impact that has on people's longer term lives. So if it were to go into health, I think there would have to be radical reforms within the health service as well. Thank you very much.
Thank you very much, Angie. Philip, any responses to anything you've heard from the panel there, please?
I'd agree with all of that. I guess that, you know, the point we would make is that, you know, authorities come forward with proposals for their particular areas. I think our view is that probably plays to the point Angie made earlier in the discussion around, different models are right for different places, really. So proposals need to speak to the sort of socio-economic context and geography of a particular place. What particular footprints do people in that place regard as legitimate in making decisions that affect their lives? I think one thing we would say on unitarisation is that if that is the model pursued in a particular area, the unitary has to be of a sufficient scale to be able to take on the sort of demand shocks and pressures that can come with running social care. And some of the smaller unitaries have not been particularly well placed in the past to deal with that. But each area will have different responses, I think.
Many thanks indeed. Now, I've got a question in the chat box, raising a serious issue about affordability of council tax. Now, clearly, it's 30 years and counting since Heseltine and Chris Patten sort of turned the poll tax into something that gave John Major enough to get through the '92 election, didn't put it to bed, and ever since there's been people saw what happened to Thatcher. It's a no-go zone. But clearly, the connection between what people pay, they see their pay in local charges, primarily through council tax, and what they actually receive, what they perceive. Sometimes perceptions are great, as an important reality in terms of getting for local services. It's very crucial. We've done reports at the car list looking at the connection between what people pay locally and what they ideally like from their services in different parts of the country. And I spoke to local government leader last week after the election. So they were sort of banging on about the fact that, look, as far as they can see, so council tax rises will be 5% year on year, and as far as they're concerned, they'll never be able to present themselves as a low tax council or a council that believes in delivering value for money for residents, as long as this system's in play. Clearly, I can't see for the life of me any radical fix of council tax charges in the coming years. But given the onus on democratic accountability, what shots in the locker do our local authorities have to demonstrate either value for money for their services, or to show that what they're delivering locally is responsive to local or hyper-local needs? Or is it just too impossible? Any thoughts from the panel, please?
Shall I just kick off with a bit of scene setting? So, 10 years ago or thereabouts, let's pick a date, 2010 maybe, council tax would have funded around a third of local authority spend. Now it's 50% on average, and higher for some individual councils. Of course, there's a spread. I think so, and that's partly because of the social care precept and partly because of reduction of other grant and income forms. But I think the biggest dislocation is partly as a result of that, but the biggest dislocation is that the majority of spend goes on a minority of the population. So children's social care would typically be single digits of the population receiving or even cognizant of the amount of money that's being spent on children's social care. Possibly 10 to 20% of the local population might be aware of what's happening in adult social care. They might have a family member in the system in some way, shape or form. So the vast majority of the population have seen massive increases through the precept, which is a bit of a kind of Hobson's choice as far as I can tell, for local authorities to be paying for what in their heads, because of the way that council tax has been sold, must be for better services or more services, and instead they're not seeing the effect of that. In fact, they're seeing, because of this shrinking of non-social care spend, they're seeing things like environmental spend and so on diminishing. They're seeing fewer, less frequent waste collections and so on and so forth. So it's it's partly the marketing of council tax pays for your local services that is doing a disservice to the sector, because that is it might be paying for local services, but largely not the ones that the average person is in receipt of.
Many thanks, Abdul. Mike, you put your hand up.
Very quickly, what is clear about discussion actually is how much, when we start discussing local government finance, we keep going back to social care. And it does seem to me, and I mean, I think, the suggestion, Angie's suggestion about having a kind of inquiry into it would be a good one. But ultimately, we're going back to the same issue. If we could sort out social care funding, then a lot of the other stuff would then start to come together and make more sense. And it does seem to be that's the issue we keep going back to. You cannot, in the end, talk about future local government funding without trying to sort out the social care funding issue.
Many thanks, Michael. Angie or Philip, quickly, any further comments or suggestions?
No further comments from me on that one, Jonathan. I think that's well covered.
No, I think the points are well made. The only other point I would make is I do think local leaders need to get out and have much more localised conversations with their electorate and enable that open dialogue, so we've got transparent local democracy, because actually there isn't the ability to have those conversations, and certainly these deeply personal services which take up most of our money are not the ones you have doorstep conversations about. So we do need to improve our engagement with our local electorate, whatever happens. Thank you.
Wonderful. Okay. Final question. Joanne Pitt asks, final question about, is there a link we can make between the financial resilience of councils and their ability to make the most of the levelling up funding? Here at Localis, we're kind of not sure what we think about the merits of constant tournament financing, jousting for bits of cash pots, but do any of the panels see a link between how your strength and your ability to get the most from what you can win from the levelling up funds?
Shall I just start on that?
Please do.
Council perspective, I think absolutely those councils who have some financial resilience and are able to invest in strategic planning and putting together credible bids that will tick the boxes for government are almost certainly going to be able to have more opportunity within the levelling up. To the degree to which that levelling up process is evidence-based. And I think what we do have to recognise that there's also been mention in the levelling up of you must have your MP's support for it. So that would indicate there are going to be some slightly more subjective decisions in the process, which mean that not only are you going to have to put your bid together well, you are going to have to use all of your soft influences to have the biggest impact. But certainly for those councils, and there are lots of them out there, thankfully not Lancashire County Council, who actually don't know how they're going to survive the next year, their ability to focus on levelling up is going to be severely constrained, and that is perhaps not in the best interest. Thank you.
Many thanks, Angie. Phil, do you want to Phil?
Shall I? I mean, I won't, not levelling up fund particularly, but we know that there is a sort of virtuous circle that can take place for those authorities that can have the resources, the capacity, the capability, the confidence to build a team to be able to make strong bids for any fund, and indeed to implement the requirements of those bids when they're successful. Then get better at that and can attract the staff to be even better at that. And the whole kind of virtuous circle of tournament funding is likely to undermine, on the average, of course there will be exceptions, but on the average will undermine the places with the least capacity, who are, in the Venn diagram, also quite likely to be the places that most need that funding. So this isn't about levelling up. This is about competitive funding, bidding, and the benefits of that compared with formula funding for need, based on need, however that is measured. And we have concerns at the NAO about the kind of trade-off between the two.
Many thanks for that insight, Abdul. Philip, Michael, would you like to finally?
No, I will leave it to Phil. I think we've summed it up very well.
Yeah, I was just going to make a couple of points on the Levelling Up Fund. I think it will inevitably impact. So I think the strongest sort of bids into the Levelling Up agenda will be able to sort of describe a model of councils co-investing alongside the fund, etc. If you've not got the financial wherewithal to do that, the impact of the funding is going to be reduced. But that is going to be a challenge for government, I think, because when we look at the spatial distribution of those most challenged authorities, a lot of them fall within the areas that you would assume to be the target for the Levelling Up agenda. So it's something that government is going to have to consider around the criteria, and also how authorities can work to pull collaboration together within their place to make the most of the funding. But it's definitely going to have an impact.
Excellent. Well, look, we've run out of time now, so I'm going to express, on behalf of Localis, huge thanks to our great panel today, Michael, Abdul, Angie, and Philip. Thank you, for giving us space of clearing for us to think strategically about the likely probable forecast for local government finance. It was as Philip said, a gloomy forecast. If this was kind of the Met Office, wouldn't be going out for the bank holiday weekend, let's put it that way. But I think in terms of a point of direction, that gives us some clear indicators as to what a pragmatic approach by local government could or should be. And I think, as ever, the elephant, it's not the elephant in the room, it's just their social care funding. Without a fix on this, we've got no way of unraveling everything that must inevitably follow from that. So huge thanks to our panel, huge thanks to everyone who's taken part, joined us today, added questions. We'll be putting this on YouTube for people to catch up with, follow up. And I think I've got the mission to write this up for the MJ for next week's edition, Mike. So I will be on my best duty for that. So without any further ado, thank you so much everyone for taking part. We hope to see you at a future Localis policy webinar in the none too distant. Thank you very much indeed. Thank you.